following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Oh, welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials down 25, Nasdaq off 8, S&P's up 4, down 4 rather. Gold contract up $14.40, trading at $1,235 an ounce. Silver up 23 cents, $17.71 an ounce. Platinum up $9, $1,012 an ounce. Copper up 3.5 pennies at $2.64 a pound. Light sweet crude down 72 cents, trading at $53.10 a barrel. Notes, 10-year note up 21.6, 124.30. 30-year bond up 1.5, 157.17. Both notes and bonds, folks. Rejected lower price last week. They want higher price, lower yield. King dollar up 38.6, 99.880. King dollar just can't handle higher price. Each and every time it tries to bounce, they sell it down. Bottom line, King dollar is a confirmed ABC structure on the way down with a price projection of 96.975. The euro is trading at 107, and the yen is at 111.79. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? You get the SPY trading sideways. You get 39 million shares. You're at 228.82. The high out here today was 229.32. Bottom line is that more than likely it's going to tag this high. The high that it's looking to tag once again is 229.71. Now, what you have here, folks, we've been going sideways out here since December 13th. That being said, you still have the pressure on the downside. You know, each and every time that we get down, you'll see that expansion of volume. So if you put up the channels from the top to the bottom on a horizontal basis, you'll see you go top side, it dies on the vine. You go downtown, it's subtle, but you have an expansion of volume. Right out here today, bottom line, you get a sideways move with light volume. Dow Industrials, what do we have with the Dow Industrials? Same type of setup inside the Dow. Dow Industrials, we traded to a high today of 20,094. The high out there is 20,125. The low of that high is 20,067. So it's going to get intriguing out here to say if, in fact, you close under the 20,067. We're under it right now. We're 20,045. If you go back to the 26th and see what kind of volume we had in the 26th. So on the 26th, folks, of January, we did 829 million. So if we stay at the price that the Dow's at right now, more than likely you're going to see a failure on price, failure in volume. Again, it's subtle, but bottom line, you go into that level, it's going to be dramatically lighter volume. What we have out here today is that you have only 442 million on the NYSE right now. So that's setting up that the NYSE may do 650, maybe 700. That's really light volume. The composite, we go over to the NASDAQ composite, we look at the composite. Composite out here trading sideways right at its highs. The high of the NASDAQ composite is 56.69. We've hit 56.68.198. That's going to be on the 26th, so we'll go back to the 26th and take a look at what we're dealing with on January 26th. You're dealing with $1.83 billion, and it's not even close. The NASDAQ composite is at $1.279 billion. That means we're going to come in at about 1.5, 1.6. So the composite also could fail on price and volume. Gold contract. What do we have with gold? Gold's in a very large ABC up, folks. You're going topside once again. We're up $14.40. You're at $12.35 out here. Gold's making its way up to the $12.58. More than likely, you're going to hit the 1,300 number out here. The swing point is 13.15, and that's what it looks like it's going for. Silver is the same type of setup in silver. What you have with silver, silver right now is trading at $17.71. Silver looks like it wants to get up to this $19.12. XAU, HUI, all the same. You get volume coming in these babies out here today. In fact, the XAU, which is pretty intense, the XAU looks like it wants to trade up to 111. Right now you're at 95. Now the 111 point is the August highs, so it's a big number. The Gold Bugs Index, that has a little bit further to go to reach something that dramatic. With Gold Bugs Index first would have to get over the 222 level, and right now you're at 217.08. Bonds, the 10-year note. What do you have with the 10-year note? 10-year note out here is moving with conviction. You are at 124.28. We have done 1.1 million contracts. It's going to, 1.17 actually. So that baby's going to get up to close to the 2 million mark. 1.8 rather than 1.8 mark. You're coming into the swing high is 1.59. So bottom line is that I suspect, we're going to build a little bit more cause, which we've been doing. It's going to go after that swing point, and it looks to me like it wants to go to the low of the downdraft of November 9th. That low inside the 10-year is 127.07. And if we go over to the 30-year and you look at the 30-year bond, the 30-year bond is approaching that low, and that will get there quicker. That's just how the 30-year trades. We're at 151.16. That number is 155.13. King dollar. What do you have with King dollar? King dollar just can't handle higher price, folks. King dollar is on a confirmed ABC structure on the way down. What we had out here today is that it made it up to a price point of 100.225. You're at 99.890. You have volume of 26,000 contracts. That little baby was going against 57,000. And that's where we broke the B point of an ABC structure on the way down, and that is setting up a 96.985 level. If you do take a look at the dollar, what I expect you're going to see out here, this dollar index, it took off from 95. It's going back to 95, and it looks like it's going to be just as fast going down as it had been going up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now down 31. You get the NASDAQ off 9. S&P's down 5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Industrial down 28. You get the NASDAQ. S&Ps are down 4. And as we do each and every Monday at 20 past the first hour, we come over to our man, Mr. Steve Rhodes. And don't forget, folks, right here at TFNN, Monday, Wednesday, Friday, we start live programming 8 o'clock in the morning. We go to 5 in the afternoon. Tuesday, Thursday, we go from 7 o'clock in the morning to 6 in the afternoon. Steve has a great show on every trading day, 1 to 2 Eastern Standard Time. You can get that, all the programming at TFNN right on your cell phone. You go to TFNN.com, hit Tiger TV. You're going to get some great HD quality video as well as audio. And you can test drive Steve's newsletter as you come over to our website at TFNN. The way you do that, you go to TFNN, go to newsletters, go to trading newsletters, and test drive Marketing Probability 30 days absolutely free. Steve Rhodes, what's going on?
Well, I know how you, as I do, love the fight between the Bulls and the Bears, but last night's sporting event, that Super Bowl, was a classic.
Wasn't that amazing, man? It's over the top. There's no doubt. There's no doubt. Edelman's, I mean, there was so many great plays. It was just amazing. It was one after the other. Yeah.
Yeah, no question. It was and I think each of us were just looking for a good game. And I think many of us thought that, coming into the third quarter, it was not going to turn out to be a good game.
Oh, totally. It was like they were getting killed, man. I mean, they didn't show up the first 2 quarters,
But yet turned out to be one of the greatest games.
Oh, no doubt, man. No doubt.
And there's nothing like watching the struggle between, the favorite who gets to the top and just seems to fall and then has the ability to fight back. And so it's a little bit about like the markets that you and I trade. And only in this case here, we get to be the coach. Right, we get to be the coach, the quarterback, the whole 9 yards. So I thought what we would do is I'd share with viewers and listeners some of the things that I'm looking at, that I see inside the marketplace. And the first place that I want to start is with a pattern. It's called a bearish wedge pattern. And what I have on my screen right now happens to be a chart of the NASDAQ composite. Now, some of these images that I've taken here are from a couple hours ago, so the price is not going to be exactly where the NASDAQ is trading, but it hasn't changed very much. Now, the thing with this rising wedge here, it really is, it's a bearish indicator, but it doesn't really become bearish until price closes below the bottom of this trend line. So there's really three places that you could sell this. Now, you can't actually trade the NASDAQ Composite, but we can use this as certainly a leading indicator as to the markets, because this certainly can lead things to the upside or to the downside. So the three places to really sell from would be, one, up towards the top of that wedge pattern. And you'll see these different numbers that are on my screen. And it was about 5-6 trading sessions ago when it made one of these seventh wave moves to the upside. So whether or not price can actually get all the way up there or not, that should be a pretty good level of resistance. Another place where you can sell from this here, or sell this, in essence, give us a leading indication, is when price is trading below my red line out here. And price is really trading right on it. Yeah. That's when the price oscillator begins to turn down. And then the third place is an absolute break of the wedge pattern out there. So that's one of the things that I'm taking a look at. The S&P 500 has a version of this little rising wedge pattern. We can see the trend line off of the bottom. We can see the one off of the tops as well. It too formed one of these seventh wave moves. So I'm watching the S&P 500 now. What's interesting about the S&P 500 is I always like to take a look at it as it relates to the volatility index. And so just as the S&P 500, just as the NASDAQ has one of these seventh wave moves to the upside, the VIX has the exact opposite to the downside. Now, these levels can be significant areas where we see changes in trend. So we have to, even as bullish as I think the market is, I'm not going to ignore these patterns here. If I see them fail, that has a different message. But at this stage, they haven't failed. Now, on this volatility index chart here, Tom, one of the more important patterns is really the red line that's on my screen, a red and blue line here. Blue means that this is a moving average. It's a 50-day exponential moving average. Blue means that it's starting to rise. Red means that it's at the 50-day and is continuing to fall out here.
Okay.
Now, one of the things that we can see is that since the election, this is that wide-ranging bar candle here, November the 9th. Yeah, we can see that price has traded below this 50-day, this is exponential moving average, for really all except for one day. Going into the end of December, we saw it just rise just slightly above that level. Then it was a complete failure on the very next session. Now, what this does is for me, it's an indicator of just how much liquidity is inside the market. Now, the real value for me of the VIX index is really, where is the VIX trading in relationship to its 50-day moving average? It's not really what the price is. So the price of the VIX right now is in the $11 area. And the more important area is, where is the VIX trading in relation to the 50-day? So for example here, I'm going back into the 2007, 8, 9 time frame. And the top portion of our chart shows that 50-day. So it doesn't matter whether the VIX index is at a 50 or it's at 11 or it's at 13, whatever it is. When the VIX index is below the 50-day exponential moving average, the market, the S&P 500, typically does one of two things: trades sideways to higher. And you can see that by just coming over to the left-hand side of the chart here. When we see the VIX index get above the 50-day, now this is priced out in the 20 area, but as soon as price begins closing above that 50-day and it starts acting as a support level, we can see where the market, the second blue line, where we see the S&P 500 trade to the downside. Just like back in the where we see the 50-day well above or we see the VIX index well above the 50-day, you can see the significant decline. So it's really important for folks to be watching where the VIX index is going to trade in relation to that 50. So if we see the VIX index start closing above that level, thus far since November, it has simply found it as resistance. That will be an important message for us. If we take a look at back in the March 2009 level, and this is when the VIX is at the 40-ish price point and 30-ish price point and 25 price point, we can see how it continued to act as a resistance level and price continued to rise. So that's a real important level for all of our viewers to be looking at. And so since November 9th, I like to call it gobs of liquidity, when prices will rise when there's plenty of liquidity out there. And that's how I look at that 50-day exponential moving average line in relationship to the 50-day. Now, if we take a look at the New York Stock Exchange and just switch over to the NYSE, on Friday, as price was moving higher, the New York Stock Exchange made a new all-time high in its advanced decline line. It didn't in price, but that advanced decline line moving to an all-time high is another indicator for us of gobs of liquidity inside of the market. the more important message of the New York Stock Exchange is that this, even though you can still get retracements from here, it indicates to us that we don't have a significant top that's forming. I believe we have a top that's forming, but not a significant top. Typically, you'll see a divergence. You'll see back here in May of 2015 when the market made a significant top, we saw a declining tops inside that advanced decline indicator, and we saw the NYSE go to make a slightly higher high. We don't have that pattern that is in place right now. The last remaining piece with regard to the NYSE is taking a look at its volume advanced decline summation index, which is making a slightly lower high right now, but that's not that significant. Here's what I expect. I expect the market's going to make, and this is the Dow I'm referring to, is going to make a fairly decent high by this coming Thursday or Friday, February the 10th. And then I anticipate that the market's going to trade lower into about the February 24th to March 2nd timeframe. And then from there, people want to look to be buyers of the Dow.
It's a bull, folks. Come over to our website at TFNN, folks. Go into newsletters. Go into trading newsletters. You can trade. You can test drive Mastering Probabilities. 30 days, absolutely free. Thanks, Steve. Have a great one. Have a safe one. Look forward to the show tomorrow.
Take care.
Stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 28. You get the Nasdaq off 7. S&Ps are off 4.5. Let's go to our man Frank in Gloucester. Hey, Frank, what's going on, brother?
Hey, how are you? Long time.
Yeah, how you been, man?
Yeah, pretty good. Not as good as the Patriots, but pretty good.
I'm telling you. Pretty intense, right?
That was fantastic.
I know. Amazing. Absolutely amazing.
Yeah.
So, of course, I'm sure Gloucester's going crazy. Boston, New England, everyone's going to be going. Well, they are going wild, right?
Oh, yeah. Unfortunately, it's going to rain tomorrow for that parade.
Oh, bummer.
Yeah,
Okay.
I know it, but what are you going to do?
Hey, that's all right. Everyone gets soaked. They won't care.
Nah, they won't.
So
Hey, so you must be in your glory here with gold. That's all I can say.
it's a run.
It sure
There's
is.
no doubt it's a run, man.
Yeah, I know it. I'm going to have several more teeth capped, I think, with this gold that I got.
That's a beautiful thing.
Yeah,
Totally.
yeah, I know it. I wanted to talk to you, though, about banks, in particular KRE.
Yeah, so the KRE, folks, is the S&P Regional Banking ETF. The fund's objective is to replicate as closely as possible the S&P Regional Banks index. So the low out here is, let's see, 32. The high is 56. Okay.
So I'm in around 55, and I'm looking at this, big run-up supported by huge volume at the beginning of November.
Yes.
And some pretty good volume lately, although it's been a little bit negative in this sideways move since the beginning of December.
Yeah.
What do you think is going to happen here?
I think it's a shot. I think,
You think it's a short?
Yeah.
Oh, okay.
So
All right.
what you have is this. I don't see it getting destroyed, Frank, okay? But
Yeah.
I can see it coming down to like 48.80, okay? So
Oh, really?
what you have is this,
All
right? Now I'm going two different places with this, and this is why. Now, this is, when this took off, folks, as the large banks took off, right? They had every right to take off. Bottom line, you're talking about a reflation story. You're talking about the dollar going to the moon. You're talking about the bonds going to hell, right?
Yeah.
Well, all of that changed. They all had the run. This had the run.
Yeah.
And when you take a look at this, you can see that you made the extension. The first time that there was selling in the KRE was on December 14th. We get down to 54.84, 14.5 million shares traded, right?
Yeah.
Now, and I know you know this, but watch this.
Yeah.
Then you make a high with 5 million. Then you make a low with 11 million. Then you made the last high with 6 million, and guess what? You just made another low at 7 million. That's telling me that at least wants to pull back to this 48.80 and see from there. Now, I'm going to go right from there to bonds because the correlation is a fundamental, I'll show you technically, to me, the bonds want higher price, right?
Yeah.
Fundamentally, folks, okay, if in fact rates were going to go up and stay up, the banks will make a fortune. They don't even have to do anything. It's all the money that's in the bank they get immediately.
Yeah.
But bonds are going the opposite way, So that's just telling me that, interest rates are still going to be low.
Yeah, but I look at TLT, and there's some pretty ugly volumes on there.
There are pretty ugly volumes. And, if you watch this, though, when you pull this back, what you're going to see with the TLT is that this thing pulled back with dramatically light volume. You're talking about going into 489 million, and you come into it with 224 million.
Oh, yeah, I see what you mean.
And
I'm looking on a weekly, right?
Yeah.
That bottom there is a pretty firm bottom then in November, December.
It seems it. And even I'm going all the way back, Frank, August of 2011, and then you can take June of 2013, that retracement there, and then we made a lower low at 224 million. So then the correlation is that it's going to take some, cause to basically get to higher price again. And something that you have to wrap your head around, the TLT versus the 10 and the 30. I take them all individually. They'll all trade somewhat together, but the TLT can jump around a lot faster than gapping up and down than the 10-year and the 30. And both the 10 and the 30, they have work to do, but they have respected. They've had rejected lower price.
Okay.
So. Okay. And then when you look at overseas, we just look at if we still look at the rates overseas,
sure.
France is at 1.3. It's like, why is that?
Yeah.
Germany's at 0.3%.
Yeah.
Every time I look at these, and I'm not looking at, I'd be looking at these easy on a fundamental basis, that this makes zero sense to me. Why are we paying 2.4 when Europe's a mess and they're paying 1.3 or 0.3%. That's saying that there's still more money chasing, that they just want their money back. In fact, there was an article over the weekend, folks, on Bloomberg, and this is pretty cool. And what the article was about was that the big monster in the room is still the Fed and on mortgage-backed securities, right? So when you read this, though, folks, check this out. They're not going to sell their mortgage-backed securities. They don't have to. This is the thing that, when I read the article, I'm thinking to myself, this is amazing. They don't have to. The average mortgage gets paid back, or we refinance and all that in 7 years. They don't have to sell anything. They're just going to keep collecting the money, man, and those things are going to be gone.
Yeah, I saw that article, too. Yeah, and when I draw a trend line on a monthly chart for the TLT, that's a nice hit on the bottom trend line.
It is. It is. And we'll find out. The TLT still has to, get into this November 9th, time frame. I mean, that's the November 9th time frame, folks, in all of the markets is a big time, because that's where, things either went to the moon or went downtown. But I can tell you that the gold's already done it. That's the first aspect. Silver is making their way there, and we'll see how these rates go. But, it looks to me like rates are still going to go lower, which will going to blow everyone's mind. I know, believe me.
Yeah, that's for sure. Hey, listen, Tom O'Brien is just as good as Tom Brady as far as I'm concerned.
Oh,
thanks a million.
You are too funny. Thanks, man. I appreciate it. Yeah, Tom Brady, man. That is an amazing specimen. There's no two ways about it. And you know what I was worried about a little, folks? If you really watch him closely, his eyes are just unbelievable of how he comes on the field. And they just didn't seem just as intense yesterday even going through the game. They were a little, he was concerned more. They weren't just coming right at you. So bottom line, they did it. And it's amazing part is that they all did it. And what did happen, a couple, one of the Tigers in the den was saying, I'm not sure whether the Patriots won it or the Falcons lost it. And there's a huge point there. There's no doubt, because that is what makes a game. But I think when whether it's trading or you're competitive in a basis all the time anyway, it was great watching the Patriots. I felt for the Falcons because, they did so good. And I know when that roll starts, I mean, it's amazing. And bottom line is that they weren't going to let go of it. And you can see, and that's where Belichick comes in, that it's every single player playing. And that's what it takes. And, even when the Patriots talk, they always talk every single player. And bottom line, you're in the probability business. Every player's playing. That's who's going to win. You stay right there, folks. We're coming right back. Dow Industrials right now down 29. Nasdaq's off 8. S&P's around 4.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So let's take a look at some of the higher volume stocks here. Now, this is going to be a big-time low-volume market out here today. You have Advanced Micro up $1.30. You have Cabot Oil and Gas up $2.28. That's up 10%. That's a big move. Apple's up $1.20. You have Hanes Brands up 43 cents. Let's see. Cliffs National is up 2 cents. We have U.S. Steel up 48 cents. We take a look at some of the Dow stocks out here. Well, actually, let's go inside the Dow Industrials. We'll see what the strength versus the weakness. Inside the Dow out here, the strength today is Boeing. That's up 1% at $1.65. The laggard is Verizon. That's down 1.2%, or 60 cents. And if you were watching those Super Bowl ads yesterday, Mobile One was just killing Verizon. In fact, one of the funniest commercials I thought out there was the father was with his two children, and he was throwing his car off the cliff like he was going to basically do himself in because he was trying to get rid of a Verizon contract. There was some good comedy out there yesterday. There's no doubt about it. Inside the NDX 100, what do we have? So inside the NDX 100, the strength out here is Hasbro. That's up 14%. They come out with numbers, big numbers. And inside those numbers, folks, it was about Frozen, the princess there, but it was also about board games. And that has to do, I'd say, with we're all on digital so much. Board games, they took in big dollars, so big number. Fastenal is number 2 leader out there. It's up 2.7%. NVIDIA is up 2.3%, and Tesla is up 2.2%. Taken away from it is Charter Communications is down 2.4%. Dollar Tree is off 2%. Seagate Technology is down 2%, and Autodesk is down 1.6%. Well, we go take a look at the spot. Well, actually, let's look at the NDX 100, the Qs. So they're right at the highs up here. You're at 125.77. The high is 125.92, and you've hit 125.85. Let's see. Can it do it before we close? Well, no, it doesn't look like it's going to do it. It'd be nice to get that thing tagged, particularly today, because you only have 8.9 million shares. So you're pushing that high with dramatically lighter volume. If we take a look at the small caps, the IWM, that's down $1.13. You know, but that being said, this is down with way too much light volume, big time too. Now, the last time it came down with volume. That was on the 30th. Today, however, you're only doing 18 million shares, so that's a light volume pullback in a dramatic way. The SPY, if we go take a look at that SPY, the SPY is going into those highs with dramatically lighter volume. You're talking about 43 million versus $110. So big numbers, no doubt. We go over to the euro. Oh, actually, let's go to the yen. So the yen stopped breaking down intraday out here, and that's where you saw that the gold market start moving even more. The yen right now is down 91 ticks, folks. 111.71 now. It broke down. The yen went up as fast as the dollar went up. The yen was trading on November 4th at 102.83. By December 15th, it was at 118. Now, when it's at 104, what that means, 102 rather, that's 102 yen dollars to one US dollar, okay? That's strong. So we got weaker, and that's what the Japanese have been trying to do with their currency for a long period of time and haven't been successful. It went to 118. That's when our dollar went topside. That got weaker. Guess what? Just as our dollar failed on price, failed on volume, all of the above, ABC down, the yen is going the other way. There's no support. This is like a 3-story building, folks, and there's no middle floor. You get the bottom, you get the top, and guess what? Once you start down, gravity takes it the rest of the way. And because it went up so fast, that's how I expect you're going to go on the way down. And that also is the correlation inside the U.S. dollar. It's the same type of situation, because if we go look at this dollar, what you're going to see is that fast, furious, all of the above, nice setup on the way up. It took out, well, what the dollar had done is this. The dollar is actually more intense because the dollar had taken out a long-time consolidation. That consolidation that the dollar was in goes all the way back to 2005. No, I'm sorry. It goes back to 2015. Okay? The number there was 100.600. Well, you were only outside of that for about 6 weeks. You got back inside of it. So the short-term price projection is 95, where you started from. The ABC structure is 96.965. That being said, guess what? Can't bust them up. This dollar's on its way back to 91.880. Now, I suspect that's going to take, 6, 7, 8, 9 months. It's not going to be overnight. But that's the way that baby is set up at this particular time. So you have a lot of moving parts, and those moving parts are happening very fast and furious. Oil also can't hold higher price. Now, what's intriguing about the oil market is this. With the dollar being weak, oil should be able to catch a bid. It can't. What is that saying? That's saying oil can't stay, this contract can't stay over $53.66. That's saying your next stop here is $51.65. $51.65 is the high of the OPEC meeting on November 30th. If we get into that level, let's say you get into that level and we go to 50.65, guess what? You are going to be right back down to the lower end of this whole consolidation, which is $44. So that level there is a big number. When you put the correlation together that the dollars are going down and oil can't catch a bid, that gives you a sense about how much oil is actually out there, and they're going to have a hard time, no matter how much they want to collude to keep the price higher, that they're seeping oil out, and we're just not buying as much oil. Unleaded gasoline is trading at $1.68 out here today. $1.51 rather. $1.51. So we're trading at $1.51. Oh, this is a good heads up. So check this out. Oil, the gasoline market, folks, is already back inside the November 30th day. So the gasoline market is saying unleaded is going to $1.40. We've done 69,000 contracts. That's the next stop is $1.40, and we'll see whether they get down to 131. So that is already saying that your probability gets pretty good that we very well may see oil break down, get into that lower level. And if we go to the XLE, we take a look at the oil and gas sector, that is already down from 78. You're at 72. You have some volume. Yeah, you get a high volume low right now at 71.91. That's when it was filling up the gap. This thing looks like it wants to trade at 69 to 66. So Exxon, which is the largest weighting structure. Actually, Chevron is probably the largest weighting structure right now. Let me pull this up because Chevron was much stronger than Exxon on the way up. Oh, look at that. Exxon's still the largest weighting structure, 15.72 of the XLE. Chevron is 14.72. So bottom line is that Exxon still wants lower price. Chevron, which went up higher than Exxon big time, but that's that wants lower price too. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now down 31. You get the Nasdaq off 7. S&Ps are down 4.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is down 25. Nasdaq's up 5. S&Ps are down 4. And if we take a look at this volume out here, you're at 524 million on NYSE. That is really light. So that is going to have a hard time even getting 650 million if they throw 100 million in at the close. That's pretty intense. The NASDAQ composite, let's see where we're at. The composite, we are at 1.49. So that's going to, they'll throw in a good 150 million there. That's going to be a 1.6. So the bottom line is that you are pushing into that swing with dramatically lighter volume. And the swing that we're talking about is the highs out here. The high from, you can take a choice, either 25th, 26th, or 27th of January inside the composite. If we take a look at the S&Ps, you're talking about the highs that were generated the same days. So bottom line is that when you are pushing into swing points and you have a contraction that's that dramatic, that's bottom line. I want to see it tested, but that's saying that you are going downtown once again. The dollar continues that can't hold higher price. The yen tonight, folks, is going to be a big number, man. This yen just keeps going, getting stronger. Right now it's down 90 ticks at 111.71, and this is quite a break. So that baby looks like it wants dramatically lower price, which means that the yen gets stronger. If we go over to the silver market, what we have with silver, silver right now is going to be closing at its highs. Right now we're at, 17.75. It's a penny over. It has some good juice behind it. It's going to need more volume, but there's not much in between here and 18.95 for it. See, the bottom of November 11th was 17.26. The high was 18.95. Well, we get 25 cents into it already. We'll see. This has enough into it right now that launch can get you right up to that 18.95 to 19.12 area, and it seems that you're going to get quite an acceleration up here. Many of the gold and silver equities had already been ABC structures on the way up. A few of them are doing an additional ABC now. So they actually have an ABC structure inside an ABC, and your probability goes much higher when you have that take place. And there's a good 3 or 4 of them that are strong. They'll more than likely just grab the rest of them and put them up. And that market is so small, folks, that it doesn't take much to really get that market juiced. And in the context of the bonds and the dollar, those reversals out there were pretty intense. They were slow reversals because they did make highs, but once they reversed, there's been no mercy each and every day in all those markets. We take a look at the 10-year, bottom line, the 10-year bottomed out December 15th. And that's a long way from where we are right now. We take a look at the dollar index. That baby probably topped out December 15th. Yeah, December 20th. Well, the first time it hit, the 15th, tested the 20th, and then tested again on the 3rd of January, And the way it's setting up even today, it's like, are you doing another ABC down? So bottom line, volatility is going to be out here in spades, and we'll see in this S&P, the Dow, the NASDAQ. I suspect what we're going to have here, it's a slow turn to the downside. And bottom line is that we'll see what the catalyst is to get this baby pushed to lower price. You stay right there, folks. We'll be coming back with some numbers for you. Dow Industrials right now down 23. NASDAQ's up 5.5. S&P's down 3.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad.
Good.
In fact, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother. That's so cool.
Right, yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting.
Yeah.
But as far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate you prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Ignore the opinions of others. Whatever people do, feel, think, or say, don't take it personally. Others are going to have their opinions according to their belief systems. So whatever they think about is not about you, but it's about them. Market-wise, let's take a look at it out here. We had the Dow Industrials down 19, NASDAQ off 3, S&P's down 3.5, gold contract up $16.20, trading at $12.37 an ounce. Silver up 27 cents at $17.75 an ounce. Platinum up $9.50 at $10.13 an ounce. Copper up 3.5 pennies at $2.64 a pound. Light sweet crude down 74 cents, $53.10 a barrel. Now, light sweet crude, folks, just can't handle higher price. It's going to be intriguing to see how it runs down into this $50 area. The $50 area is where the OPEC meeting was, and if it gets into that area, by, let's say, 49, 48, bottom line is that you're going to see 44 bucks. It hasn't been able to hold higher price. Notes, the 10-year note up 20 ticks, 124.29. 30-year bond up 1.5 points, 150.13. Both notes and bonds, folks, last week rejected lower price, had lighter volume. Bottom line, they're going topside. They have price spread. They have volume behind the move. They both want higher price, which equals lower yield. King dollar. King dollar just can't handle higher price. It was up 350 ticks out here today. End up closing down 32 ticks, 99.810. King dollar's in a confirmed ABC structure on the way down. Your first price projection is 96.965. That's about 3 pennies from where we are. I expect what you're going to actually see out here is that King dollar wants to run into the 95 area. Euro, the euro is trading at 107, and the yen is at 111.67. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You got a light volume day out here. You're at the highs. Bottom line, I expect these highs are going to get tested once again. No juice up here, but you're right next to them in the SPY, that's for sure. We're 228.93. The high's 229.71. You got the 229.32 out here today. Is it going to break it? I don't see it breaking it. When you're pushing into swing points and you're contracting with volume like we have, that's the first part. Second part is actually just as important. And what it is that because we've been here, folks, since the December 8th, what you can do is that you can set up, a channel, a nice horizontal channel. And you can see when you set up that channel that there's a lot more volume on the way down versus the way up. That's all about distribution. So it's still happening out here. Bottom line, I expect you are going to get it tested because we're right next to it. Dow Industrial, same type of setup in the Dow. The Dow today hit 20,094. The high out here is 20,125. What we did do in the Dow, now this is where this gets interesting. The Dow technically did fail on price and volume. And what it is this. The Dow went into the high of the 26th. So you take the volume from today, and then you take the volume from the 26th. So the volume today was 769 million. The 26th was 829 million. You went into the low of the high, rejected it on price. That's saying you're going to go back downtown. The NASDAQ composite. What do we do with the composite? Composite's just laying at the highs. The high in the composite is 59.69. The low of that high is 59.47. So you can see the composite is into the highs. Bottom line, we're at 56.63. Composite also dramatically light volume. But bottom line is that you're at highs, and the composite can actually take that one out. Because what the difference is that the composite is deep into that bar. So it doesn't have to just do a test. We're at 1.7 billion in the composite, and that correlation, let's see, the 26th we're dealing with. You're 1.831. So you're still 100 million short in the composite. Gold contract. What do we have with gold? Bottom line, gold wants higher price. You had gold go up $16 today. You've done 190,000 contracts. It's a confirmed ABC structure on the way up. You're talking like 12.50 to 13.15. So a big move out here. XAU, HUI, all of the above. If you look at the XAU, now the XAU, we were up $3.27 today. It looks to me like the XAU actually is going to make a run for 114. Now the 114 area, it's actually, the price projection is 111 I have. So 111 would be, yeah, 111 is, you're talking right under the August highs. You had a breakout here today, and I won't get the volume until tonight, but I can tell by the way that the equities were trading, meaning, you know, the breakdown inside the XAU, that there's volume in this market out here today. Rango Resources came out with numbers, huge numbers. It broke another B point of an ABC structure on the way up. It's a monster ABC up also. So there's some real action. The Gold Bugs Index, was up 738. Has the wide price spread, has the volume. The difference is the Gold Bugs Index right now, 250 is game. The August high of 285 is not game just yet. But the Gold Bugs Index only has to get up another, oh, actually, hold it. Oh, this is going to get interesting. 218. Yeah, I gotta look at this tonight. The Gold Bugs Index might be generating the same deal. When I see that volume tonight, it could be generating the same deal because it launched at 218. You're at 219.68, and bottom line, that would launch. That'd be saying 285 would be coming at you. Bonds, the 10-year note first. 10-year note out here. Bottom line goes topside, 20 ticks. We're at 124.29. That wants higher price, and what that's all about. All these metal moves, folks. The bond moves all about King Dollar. King Dollar's a ABC structure on the way down. You're talking, we're at 99.810. That wants 96.985. You stay right there, folks. We come right back. Dow finished down 19. NASDAQ off 3. S&P's down 4.5. We'll get right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 19, Nasdaq was off 3, S&Ps were off 450. Let's go over and take a look at the XLF. So the banking structure out here, we are trading at $23.61. This had a nice expansion, from the election, November 3rd. November 3rd, it's trading out here at November 4th, it's at $19.40. Goes topside straight up to 23.83. Now, that being said, what you have happening is this. It looks to me like you're going to get a retracement to the 2170 area. And what's intriguing here is this. So picture this. Since we've been going sideways on December 8th, you had most of the selling in the bottom of the channel. These are setting up, and in the markets in general, folks, you can set up some nice channels right across all the markets because we've been going sideways for so long. Now, that being said, what you did have happen on Friday, last Friday, is that you went topside inside the XLF. So we went from a price point of, on Thursday, we were at $23.10. On Friday, it caught a bid. It gets up to $23.73. Now, what you also had happen on Friday is that you had all the banks at the White House. Bottom line, Trump's going to get rid of a lot of the regulations. Market likes it. They go after the XLF. Now, that being said, watch what happened here. Is that you had volume of 86 million. You're going into the high of 142 million. It couldn't get into the high, number one. Now, you'll hear me talk about a lot, if you have an expansion of volume, as you're pushing into the high, you want to go higher. So I was looking at this and I guess, it's going to go higher. It's pushing into the high. But we know that markets talk, walk, and squawk at highs. So watch what happened today. You got over the high of Friday and you failed. This is pretty intense. So watch. We did 34 million shares. You got to a high today of 23.78. The high of Friday, which was catching the bid, was 23.74. Your correlation is 34 million shares versus the 87 million, 86.3 million. You failed there, and then you were actually going into the high that had 242 million. So that baby is set up to make a pullback down into the 22 to 21 area. If we go over to the KRE, and this is what maybe bring it up, our man Frank from Gloucester was calling in the first hour about the S&P Regional Banking Index. The Regional Banking Index is set up the same way. What the difference is that the Regional Banking Index did not get a bid. Well, it got a bid on Friday, but it didn't have a volume expansion as it got that bid. So the KRE also took off on November 4th. That was $42.61. Goes straight up to 56.29. You came down in the KRE just as we did in the XLE on December 14th. You come down hard. Then you came down hard again on January 17th and slightly on the 2nd of February. This index also here, folks, is set up to get back into, it looks like 46.69. Now, that correlation inside the regional banks and inside the large banks, when you take a look at the bonds and the notes, they want higher price, and that was what that run was all about. So we're right at a nice point right now that it looks to me that you have a roll coming. The financials look like they're going to roll, and they're going to roll pretty quickly. If we go over to J.P. Morgan Chase and we take a look at J.P. Morgan Chase, you're going to see J.P. Morgan, the high of J.P. Morgan is 88.17. We got, on Friday, we got to 87.31. We did 17 million shares. Well, we get over that high today, you did 11 million. That's same type of setup. J.P. Morgan looks like 77.25 is the number. Right now, you're at 86.77. We go take a look at Bank of America. What you have with Bank of America? Hanging right at its highs. The Bank of America high is 23.39. We got to 23.38 today. Backed off, and now your correlation there is 87 million to 162. And Berkshire Hathaway, which is the largest weighting structure inside the financials, Berkshire is trading at 163.42, and we'll see whether that can make it through 164.44. 164.44 is the number on Berkshire. Now, Berkshire had already come down pretty hard off its high. We did 167, that got down to 158, but then it had a small sign of strength. But that being said, it already tested the small sign of strength, couldn't handle it. So it's intriguing with all these banks right now, because we had such an expansion on the way up. It's like, man, you know, are they really going to retrace that quickly down to those lower levels? Technically, it looks like the setup is there. And fundamentally, what I expect you're going to see, it has to do with the aspect of the notes and the bonds themselves are going higher, which is lower yield. That's the first part. The second part has to do more than likely with the amount of business that they're actually going to get done with large companies. You got to remember something, that large banks, folks, okay, they make plenty of money on you and I, but that's not where their money's made. Where the money's made, the J.P. Morgans of the world, the Bank of Americas of the world, the Morgan Stanleys of the world, the Goldman Sachs of the world, they're made by doing monster deals, okay? Whether it's merger deals, monster banking deals. A banking structure, bottom line, what a banker's job is to this. They sit at their desk all day long trying to figure out who needs money, what can I put together, how can I pitch it. If you're a large company, you're going to get a call, the pitch comes in, we want to give you money, we want to do this deal, we got another company you think you should buy, all of the above. Bottom line, between trade deals and what's going on internationally, I expect what you're going to see, these banks are going to get hit. Because the bottom line is that the borders are smaller now, and the amount that are going over borders is still very quickly. The bottom line is that a lull, which we have right now, a lull in doing business, wide open business, hurts banks beyond belief. Because what ends up happening inside the financial business is that each and every quarter they have to hit their numbers. Each and every month they have to hit their numbers. And in fact, if you if you are going for whether it's bank loans or mortgages or all of the above, always be cognizant of it's always, not always, but it seems to be a very sweet time that if you're going and you're trying to push this before the end of the month, depending on what month it is and what banks you're dealing with, folks, okay, they will push that out quicker if, in fact, they're trying to make numbers. That's just how it goes. It's a paperwork deal, and that's just how it goes. And, you know, you'll see it. I mean, it's pretty cool, actually, if you're on the right side of it. Let's put it that way. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow finished down 19. NASDAQ off 3.5. S&P's down 450. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to that oil market. So oil, which I had brought up in the rundown of the markets at the beginning of the show, this is getting really intriguing. And the reason has to do more so with the aspect that, you know, you have the dollar pulling back. When the dollar pulls back, of course, bottom line is that, you know, commodities should be able to catch a bid easier, you know. And why? Because all commodities are priced in U.S. dollars. That being said, what the oil market has had a very tough time doing is staying over the range of $53.66. we had gone topside on November 30th. So November 30th, folks, is the benchmark. November 30th is when OPEC met. That's when they decided they're going to get together, they're going to raise the price, or they're going to try to raise the price and try to keep the supply down. I would say they were successful. Basically, the question is how long they're going to be successful at it. So that's when oil went from $47 to $51. Then it broke topside. It broke topside on December 12th. What had happened then, that's a Monday. What had happened on Saturday night, the Saudi oil minister came out, and bottom line is that he was reinforcing the opinion that this was really going to fly. Well, it stayed up there for one day and gave it up. Went sideways. And then what you did, you dropped back into the lower range on the 18th of January. And from that point on, each and every time that it tucks its head over the 53, 57 to 54 area, it just can't handle higher price. That's number one, saying I suspect they're going to come down to at least the high of November 30th was 51.65. You get into that high, and if we have some volume as we get into that high, you're going to go right down the other side, meaning first you get down to the 47, then the 44 is going to be wide open. What we did out here today, and this is a heads up for the market in general, is that gasoline did that. Unleaded gasoline got into that level today. That was down to almost 4 pennies. That came into the November 30th time frame. That the high of November 30th is $1.52, almost $1.53. Right now, $1.51. And we had 71,000 contracts. So let's look at this for a second. Yeah, that's big contracts. Yeah, this is saying, hey, unleaded gas wants to go back to 131. Actually, let me do this another way. If I pull this back, okay, it hasn't broken its uptrend yet from the lows. So the lows right now in this contract was February 5th at 105. In order to break that uptrend, let's see where we go. It's getting close. It would have to be down to 146. Right now you're at 151. So that's going to get intriguing watching that whole area play out. If we go over and we take a look at the XLE, which is, so first we looked at the XLF, now we get inside the XLE. We bring this back. What you're going to see inside the XLE is that, the XLE broke topside the week of December 2nd, and it had volume behind the move. Now, that being said, the XLE is teetering for a failure. Right now, we're at $72.78. If in fact so a normal retracement on the XLE, first off, would be $70.07. That wouldn't be a breakdown. We came down off of $79, but if you get into the 70.07, you have light volume, it'd be like saying, okay, oils and the oil service equities, the big equities, that's where they're going to consolidate. This is a new consolidation. We'll see how it gets into it. What does happen inside the oil and gas sector, folks, is that they love to consolidate for long periods of time. I like trading those equities many times because of that. When a consolidation starts up, like the last consolidation we had inside the XLE went from April of 2016 out to November of 2016. Nice long consolidation. This may be a new consolidation at a higher level. We're going to find out. We're going to find out pretty quickly. When you do look at the Exxon Mobil's of the world, Exxon is still having a hard time catching a bid, but it's at the bottom of its consolidation right now. The consolidation it's been in for, let's see. Yeah, so this little baby's been, it's only been since September. And actually, when I look at this weekly, this came down with way too much volume last week. So we came down with 71 million shares. You're going into 83 and 63. So that's building that the way that number is set up right there. It looks like it's setting up to get to lower price. If we go take a look at the PPLT, This is the Platinum ETF. This is trading at $97.15. And this is a pretty cool indication. If you want to see how something presses a swing point with volume, you bring this back last Thursday, monster move, man. Holy cow, 96.58, 283,000 shares versus 71. So this baby here, this baby here is on its way to 107. You're at 97. What's going to get intriguing here is this, folks, is that's August also. So if you're in the metals market, on the way down in the metals market, folks, you had a few different floors. It was fast and furious, however, from August of 2016, going right into December of this year. And what you're going to see is that the market itself, the metals market, is launching over the November downdraft. That's big because the November downdraft was fast, furious. Well, we're launching over that area, and you're launching over it in the platinum market with volume. What does that set up? That sets up that you're going to run to the the August highs. What that sets up, now this is where this is going to get really wild. What that's setting up is that you get up to those November highs, man, that's going to be like, okay, there's not much that can stop it from going to 147. We'd all be back to the July of 2014 level. And, it has juice behind the move. So there's going to be a lot of, there is a lot of movement out there, and I expect you're going to see a lot more movement. If we go to the GDX, and you take a look at the GDX, what you're going to see is that the GDX is trading 25.40. The high of the downdraft is 25.70. I expect what you're going to see more than likely in the GDX tomorrow. This could jump the creek. If you jump the creek, the GDX could open probably 25.90, somewhere in there. And if you get that, then you're going to be at, 20. Yeah, if you get that, you're going to be up at 28.65 pretty quickly. Because a few of the equities actually did that today. Rango Resources, that did it. Of course, that was a powerhouse. That's coming into its downdraft of $90.90. It had 1.7 on the way down. And guess what? 1.7 on the way up. It's a good indication that that supply line is getting eaten. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. The Dow finished down 19. NASDAQ off 3.5. S&P's off 5.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to Fox, 21st Century Fox. They just come out with numbers. They closed, let's see, where should they close at? Okay, so they closed at 31.06. It's trading at 30.51 right now. And numbers go like this. So the earnings per share were, the estimate was 49. They made 53, so better than the estimate. Let's see what we got here. Okay, sports and politics were good business for Fox, helping Robert Murdoch's TV and film empire overcome currency troubles and tough times at the box office. The parent of 20th Century Fox film studio posted second quarter profit that beat analyst estimates, benefiting from strong advertising, 7-game World Series, won by the Chicago Cubs, and growth in advertising, cable, and Fox News Network. Fox had strong wins at its back in the quarter, including high TV ratings for baseball, an election year that drew a lot of political advertising. Profit, excluding some items, grew to 53 cents a share versus the analyst estimates of 49 cents a share. Revenue in the period ending December 31st rose 4% to $7.68 billion. Now that's where they missed. I see. Okay. So earnings per share, bottom line, they come up bigger, but you can basically you can kind of do that for a few quarters. Top line, that's what people are looking for. The estimate was $7.73 billion. They come in at $7.68 billion. And I suspect they're going to get big numbers from the Super Bowl yesterday too. And I suspect what they're going to probably also get is a few more commercials at big dollars. You know, that's how it seems to be shaken out. What's going to get intriguing here is that, this is just coming across the tape. So this is from the U.S. Chamber of Commerce, folks. So this is going to get intriguing because, I've talked about this a few times. The large companies, folks, okay, have rolled over at the beginning of this administration, and they're bowing to Trump. That's, I suspect, has already stopped. And the Journal was the first one that threw that out there about a week and a half ago. This one here, so President Donald Trump should renegotiate NAFTA in a way that builds upon rather than hinders the movement of goods and people between Canada, the U.S., and Mexico, the head of the U.S. Chamber of Commerce said. Now, that the head of the U.S. Chamber of Commerce, folks, is the head of the biggest businesses in this country. And we're not just talking tech. We're talking all of them, big time. Tom Donahue told the business audience Monday in Ottawa the new administration has already taken positive steps, such as pledging to curb regulation and advancing Canada's proposed Keystone XL pipeline. Throwing up roadblocks to trade within North America trade agreement would raise costs and threaten U.S. jobs, Donahue said. We would insist on doing it in a way that doesn't disrupt the 1.3 trillion of trade that depends on NAFTA. Bottom line, folks, what you're going to see out here, this is going to be the large multinationals. What they need is that they need someone to run cover for them. The Journal is the first one that started to run cover. Evidently, the Chamber of Commerce is going to be the next one that's going to start running cover. You're going to see some pretty intense lobbying. You're going to see pretty intense pushing back and forth, because the fact of the matter is I've never seen anything being so blatant that you get a company, you call up the company and you start telling it what it's going to do. The bottom line is that has that happened regulation-wise in the past? Yeah. It hasn't happened to the aspect of telling companies how they're going to run their business. And in fact, it's just the opposite of what we're all about. And you're going to see that come out on the large companies, because large companies realize, I think, at this particular point that, guess what? Their bottom line is going to get sliced and diced. And just what I was talking about in that banking structure, that's more than likely what's happening inside that banking structure, why those banks can't go any further, any higher. It's going to be about the amount of deals that get done and the amount of free flow of cash that gets done. Some of the high volume stocks out here in a low volume market, because we definitely have a low volume market out here. You had Frontier Communications down 9 cents. Actually, let's go first. I want to go over the biotechs. We haven't looked at the biotechs for a while. So the IBB, this is setting up nice. So the IBB today was up 49 cents. You're at 283. This thing looks like it's going to try to get up into 286. 286.69 looks like the number. So this is going to get interesting, and to see how that tests up at that higher level. To go back to those higher volume stocks out here, this is what we have. You have Intel was down 25 cents. AK Steel was up 7 cents. You had Facebook up $1. If you go over to those steel companies, what's going to be intriguing is this. So if you look at U.S. Steel. Now, U.S. Steel, for some reason, has a huge short interest. It's 11.82%. What U.S. Steel did today, let me see. So 34.98. Yeah, it tested. Okay, so that tested, U.S. Steel on Thursday had a good day. I mean, it had price spread in it, had volume in it. Went from 31 to 34.92. But guess what? You got above it today, you closed below it. And that's saying that U.S. Steel can run down to $25 and you're at $34.20. Now, I think it's going to be harder because of the aspect of the short position of 11.8%. If we go to AK Steel, this also has a monster short position. That short position in AK Steel is 14.23%. And, bottom line, I expect lower price out here. This is a nice ABC structure on the way down. Let's go to Al in Apollo Beach. Hey, Al, what's going on, brother?
Not much, Tom.
How you been, man?
Not that good. I still waiting for my VA case. It's been almost 11 years. 3,963 days.
Hey, so
for my VA.
And how is your foot? Do you still have it, I hope?
Oh, yeah, I still have my foot. I went to the outside doctors, able to save that, but...
Okay.
I suffered a heart attack, and the VA doctor basically told me, take some pills, and I'll see you in 6 months. I went to St. Joseph's, and the next day they rushed me in. I had 80-90% blockage in St. Joseph's Hospital.
Okay.
Dr. Maniscalco saved my life, and the VA...
So did they do a triple bypass?
Yeah, triple bypass.
Oh, that's awesome, man. That's great. Okay, cool, man. You got a new life. That's huge. That's great.
Yeah,
man.
but the VA won't pay any of the bills. It's like, thank God I had insurance on the outside, but I'm paying for all my insurance. I hope Trump does something about the VA, at least picking up my co-pays or that. It's a lot of money.
Yeah, it seems that
it's just a shame. It's a shame being treated like this. I mean, and also Bill Nelson's ridiculous too. He called Washington, D.C. police on me because I kept on calling him. I said, well, you had it was easier to get to the moon to get my case solved.
And
the
so,
less time to
are
get to
you in a backlog of your case, or did they already decide that did they make a decision?
They
on it?
denied my case, and then I got it reversed.
Right. And then, so now there's a backlog of like 2 or 3 years, right?
Yeah.
Yeah. You stay right there. We'll be coming right back. Our phone number is 877-927-6648. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking to Al from Apollo Beach, and I believe he wants to talk about Mosaic. Al, is that right?
Yeah, Mosaic and Lumber Liquidators.
Okay, so Mosaic's coming out with the numbers tomorrow morning. It's trading 32.03. I like what this looks like. I'm sorry, what?
I'm just saying is they're hiring a lot of people and they're starting to expand.
Yeah, no, this looks like an ABC up. You get 22.80s, let's say 23. You get like $8, which would get you $35. Well, I guess it already hit 33. Yeah, it's an ABC up to approximately $35.
Okay, what about the other one?
Don't touch that Lumber Liquidators, man. That thing's still in trouble. That came down hard many times. Okay, the last time $18 to that $15 area. That's just a counter trend bounce. Let me pull this back a bit. Yeah,
they're supposed to be diluting the stock to reissuing some more stock.
Yeah, I mean this thing looks like it's going to get down to 11.62 again. So, and
I know I've been playing with it with just a little bit. And it was to put the stops and stuff in there. When it hits the bottom area, put a stop If it drops 25 cents, get out of it.
Yeah, and this has a Lumber Liquidators has a short position, folks, of 32%, which is just amazing. So 1 out of every 3 shares short, and that means they do have to be bought back. So that'll take a while to get down to those lower levels, but I wouldn't. I mean, yeah, if you're trading it intraday, great, but don't go long.
What do you think about what do you think about like Wheaton and the silvers?
About what one?
You mean, is it Wheaton? Is that a silver company or something?
SLW, I think you mean, right? Silver Wheaton?
Yeah.
SLW is trading at 22.70. Yeah, this is on its way up to 24.97. Yeah.
Okay, thank you, Tom.
Okay, man. Have a great one. Have a safe one. And so tonight, folks, what you want to be watching real closely is this. The yen, if you're in the metals market, folks, you want to watch that yen tonight. The yen start breaking down. Well, it did break down. The bottom line is that, it's been coming down. This thing broke the consolidation it was in on the, let's see, we broke it on the 31st. You broke to another lower level today, and there's not much to stop this thing from going down to the 105 area. Right now, you're at 111.72. That correlation is just the inverse correlation of the good old U.S. dollar. So the bottom line is that you're going to see, I suspect, the dollar going into lower price. As the yen goes into lower price, that means the yen gets stronger. And what happens when the yen gets stronger, folks, is that the metal market likes to go topside. And I can tell you from the aspect of all you tigers and tigresses out there that we did not get one gold call. And, folks, that is music to my ears. Okay, so the bottom line is that the run has been nice out here. Without a gold call, though, guess what? What happens there is that people that had the run probably get out. Other people still shorting it. The bottom line is that means that run's going to, probability-wise, continue. Because what you do have is that the last week and a half has been really tough. Tommy and I were talking about this morning, to kind of stay in there because it was little by little by little. The correlation, however, is that when you do put the dollar together with the bonds, with the gold, you want to go with the longer trend or what the trend would be in between all of those. And that dollar index is showing us it broke down with volume. It's an ABC structure on the way down, broke the B point with volume. It had an expansion from the 95 to 103, gave it up at 103, gave it up at 100.600. You're at 99.835. That price projection is 96.965. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here. 7 o'clock tomorrow morning. Wow! Look at them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.